Hey guys, and welcome back to the channel. If you're new to the channel, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. I'd like you to do me a favor. And this is the only favor I'm going to ask you. We've done a research. We've realized 51% of the people that are watching our videos have not hit that subscribe button. So I'd ask you to kindly hit that subscribe button in order for us to be able to grow the channel, and liking the video also would help the algorithm to push it to wider audience. So I'd ask you to kindly do that favor for me. Fantastic. Smash that subscribe button now. Brilliant. Thank you. Really appreciate that. So let's get to it. In this video, I'm going to share with you the fastest way to buy rental properties without working on it. If you're looking to invest in properties and you don't want to get involved in all this renovation work, this video is for you. I'll take you step by step on what processes you need to do in order to work on building your property portfolio. So let's get to it. You see, in order for you to be able to buy properties that really gives you the better return on investment that you're looking for, instead of buying and renovating them, if you don't really want to work on getting properties, like getting on doing all these works, the first thing you want to do basically is to use online platforms. You see, online platforms like your Rahim, Zoopla, On the Market would be an efficient way to start looking for properties. Maybe you want to determine where your gold mine is going to be, which area or town or city you want to invest in, and you go on this online platform, start to looking at the properties in that area. So once you start looking for properties in that area, you will soon start to learn on which one is below market, which one is overpriced, or which one is just at the right market price. The second thing you'd like to do, if you don't really want to get into working on this thing, is to get an estate agent, a reliable estate agent. So what you do, you give them a call, find out what they do, and ensure they are an expert on the sort of properties that you're looking for. Build a relationship with them. So what they will do at that point is any deal that they saw that they think is relevant to you, they will push that deal to you on an email, or maybe give you a telephone call, however way you want them to communicate with you, and then you can review that deal. And if that deal is good for you, that's one way of doing it without actively being on the platforms or online platforms looking for deals left, right, and center, or networking with people, going to property events. If you don't want that could be another way you could get properties without working on it. Now, if you're one of those investors that do not really want to get involved in doing this work, so once the estate agency look for these properties for you, the next thing you want to do, you want to buy these properties at discount. So now, why do you want to buy the properties at discount? If you buy the properties at discount, it gives you a leeway for when the property price goes up in value. Because when the property price goes up in value, your discount will further increase the value of the property. Suppose you saw £100,000 property, and instead of buying that property at £100,000, you were able to buy it, let's say 10% discount, let's say at £90,000. So fast forward to a year later, and that property goes up by 10%. So the 10% is from the £100,000. So that property would have gone up to £110,000. So if you minus the 90,000 from the £110,000, you'd have made £20,000 just in capital appreciation. Also, if you don't really want to tie up your money, you want to have a bigger discount at that point. Maybe you want to have 15, 20, or maybe perhaps 25, because if you got 20% discount, you can hold on to that property for like a couple of years. You're able to recycle all your money by remortgaging the property, recycle that money, so you can go again and buy properties every couple of years or so, if that's how you want to do, if you don't want to go through the renovation works and all that sort of thing. So knowing that point is very important, because that's what allows you not to get involved in all this messy kind of building and all that sort of thing. So the next thing you want to do then, once you know you've negotiated the deal, you're likely to get the property deal, you need to get a pre-approved finance. You need to ensure you've got your finances in place. Arrange the finances in advance. The reason why you want to do that is just to check whether you haven't got anything that would stop you from buying that property. Things like CCJ or outstanding debt, or literally, or to see where your credit score is at before you even start buying those properties. So it's very important for you to get pre-approved in advance, knowing that once you've got a deal, you negotiate on it, you are likely be able to buy it. So at that point, and once you've got that pre-approved, the next thing you want to be looking at then, before you even get this property now, is getting a good management agent. Now, getting a management agent is what's gonna make your property work without you. That's one of the most important thing you need to do for your property. Do not rush to get a management agent. Do not rush to rent your property. What you want to do, you want to make sure your property is with the right management agent that will manage your property on a day-to-day basis in a professional ways. There are so many management agents out there, but believe me, there are fewer of them that are good and can be really relied upon, especially when things goes wrong. Because the only way you know estate agents is a good estate agent is when things goes wrong. Because if they can take responsibility, take ownership, and resolve the issue without you actively getting involved, that's one of the best agencies you could ever have. You want to keep that management agent. And then guess what? By that time, you'd have negotiated your property and you go and buy something that we call a turnkey property. A turnkey property is a property that you do not need to do any work after you've bought it. It would have been refurbished, decorated, painted, and ready for a tenant to move in. Hence the reason why it's called turnkey. You can turn that key, whack a tenant in there, rent it, and you're on to the next one. Okay, that's what you want to be looking. It could be a renovated property, it could be a new build property. So if you're a very clever, smart property investor, you might want to be buying new build. The reason why I think it's good to buy a new build, especially off plan, I'm talking about here. I'm not talking about when it's already built, okay? The reason why you can buy that at the beginning of a development, when the developers are starting to build their properties, when they haven't put any bricks or foundation on the ground, there's a time to get these properties at discount. You can go then negotiate in a couple of properties, or maybe one property. Tell us, I'm an investor, I want to be the first person, second person, one of the first people to buy your properties before you put that foundation down. You've got an opportunity at that point, because at that point the development company wants to get as much money as they could possibly can to start their development journey. But at that point, basically they're desperately looking for money. And the beauty of that, you don't need to put your 25% down, you don't need to put 20% down. Some of them would only ask you to put 5% down once you've agreed the price, and you've got an opportunity to negotiate significantly below market value. Right, you can go for 20-25%. I've seen an investor that is that I work with that got this new development properties at 35% below market value. He was one of the first people to buy these properties in that development. So obviously, once the property is done, he's literally got a property, hold it for a couple of years, remortgage it, recycle all that money back, so you can go again and buy more houses. Perhaps if you don't want to deal with builders, you want to be looking buying property that way. And the second best time to buy a property from a development project is when they're selling all their stock. Suppose they've sold 95% of their stock and they've only got 5% left, and they're desperately looking to sell those properties. And if you turn up at that point, you are likely to get these properties at discount as well. I've bought a couple of properties that way in Birmingham. I went there, I had an information, someone told me, look, and these people looking to sell, they've only got 5% left and they really want to get rid of the stock so they can go to another development project. You go work with them and see if they were able to provide you a discount. I was able to get 40% below market discount. Absolutely unbelievable, right? When I negotiate with them, they're thinking, what? Really? 40% below market? How do I know it's 40% below market? Because the property is next door and the other side was sold at that price. So if they sold them at that price and I bought them 40% from the price when both next doors bought their properties, obviously it's 40% below market value at that point, because they want to get rid so they can go again in their next development project. Okay, because they would have made all their profit at that point. They just want to get rid of this property, flog them, and then obviously was able to get the discount. And one of the properties I bought actually was their show home. One of them was the show home. They've done all the show home. People have moved in. They've sold most of it. The show home is no longer needed. I went there, bought that property at discount, and it's already furnished as well. Beautiful way of buying it. And the other property I bought was their office. Okay, so their office was a house itself. So basically we negotiated on that, bought the office again 40% below market value. That's one of the best times to buy properties if you do not want to do the renovation, all this messy work. And the third best time to buy a property from a developer would be the time when their financial year end is about to hit. Suppose their financial year end is, let's say it is 31st of March, right? If you approach them in January and February, going towards March, you're likely to get it also significantly below market value. So these are the things you want to be doing if you do not want to work on your property investment portfolio. If you don't want to be doing all this renovation work, looking for builders messing you about, don't know where to get materials and all that sort of thing, this could be one of the best ways you could expedite your property investment portfolio without doing the messy work. I really hope this video has been helpful. This video has been helpful. Smash the like button, subscribe to my channel for more amazing videos. I look forward to sharing next video. God bless you.